Hi, and welcome back. Today, we're going to be talking about Bitcoin and using it as a case study for how you should consider investing in stocks. We'll be doing other programs about mutual funds and other types of investments in the future. But this case study using Bitcoin is very helpful in identifying the issues that you're going to face as an investor. Hi, I'm Gerald Markwith. I'm a certified financial planner, and this channel is dedicated to those under 50 years old. Here I try to teach you the things that you should have learned in high school and college, but they never got around to teaching that. Now, I hope you like and subscribe and share this information with others who also might benefit from what we're talking about. So let's get right into it. When we look at something like Bitcoin as an investment, I should point out that we're not going to tell you whether you should buy or sell it, but rather the methodology of approaching any sort of investment you might have. So we're not giving financial advice here. We're just giving you an idea, a blueprint of how you might go about finding out what to invest in. Now, bring up the subject of Bitcoin, and you're going to open up Pandora's box of all sorts of comments. People will roll their eyes. You'll hear extreme statements on both sides. And sometimes you get a lot of heat rather than much light. So consider that when you're looking at the comments section and things like that, or just anywhere on the net that you might come across a discussion on Bitcoin. So let's get into it. First, when you're evaluating a security, you might want to figure out what do they do and how do they get to where they're at. So let's talk about the origins of Bitcoin, and then we'll get a little deeper into the subject. So it appears here that by the chart that Bitcoin started quite some time ago. When I say quite some time, about 16, 17 years ago, there was a white paper written by a mysterious figure, Satoshi Nakamoto. And the white paper was about trying to develop a digital currency, known also as a cryptocurrency, that would have a fixed number of shares and be used as a store of value as well as for future transactions. That really didn't come about until about a year or two later when Bitcoin made its introduction. You can see by the chart that Bitcoin started actually trading in 2009, and by 2010, the first, if you want to call it, transaction took place when 10,000 Bitcoin were offered to buy a couple of pizzas. In today's amount, that works into hundreds of thousands of dollars. So it's a pretty expensive pizza. Now, we're assuming, of course, that the people that got the 10,000 Bitcoin held on to it. We don't know that. But Bitcoin over the years has turned out to be a very good investment, very high growth investment. And so when you're talking about something like this, Bitcoin, this is something that's not physical. It's strictly digits out there, if you will, in the internet space. Now, the SEC has called Bitcoin a commodity, a digital commodity, very similar to what you'd see like with gold or any other metals that are out there. For that matter, commodities could be agricultural in nature. So most commodities are physical, but not in the case of Bitcoin. So your first decision in looking at any sort of investment is what do they make? And what would people do with it? That, of course, is part of the issue around Bitcoin. Now, I put on the chart here what's called a proof of work mining process. Keep in mind that when we talk about Bitcoin mining, it's not picks and axes like you would see, say, down in a coal mine or something like that. This is all done by computer, where very difficult mathematical problems are presented, and computers, high-speed computers, go to work trying to solve the mathematical problem, and eventually they can earn a Bitcoin, actually a little over Bitcoin, about 3 Bitcoins for their effort. Now, back in the day, as they say, if you went back to 2010, you could probably have mined, I use that in quotes, mined a Bitcoin right on a regular laptop. Not so today because the problems are far more difficult, and it takes a lot of electrical power to actually solve these particular problems. So mining Bitcoin is a difficult process, but ultimately rewarding if you can solve the problem, as it were. And there are Bitcoin mining companies that are out there as well. So let's talk a little bit now about what I will call the pros and cons of an investment, say like Bitcoin, but really the pros and cons of any investment that you're going to make. So let's talk about this right now. So if we look at the chart, we're going to do a T-chart. That was first invented by Benjamin Franklin. And the idea of doing a T-chart is actually very valuable when it comes to investing, especially, say, in stocks. You want to list on one side the pros and on the other side the cons, and then weigh them out as to which is a heavier weight that you give to it. Now, Bitcoin, like anything else, has the good and the bad. So let's examine, based on the chart, what happens in the case of Bitcoin. Number one, Bitcoin has a very high return potential. So if you look over the last 15 years or so, Bitcoin has generated very high returns, probably some of the best you'd ever find in the market. And of course, in that case, since Bitcoin doesn't really produce anything, it comes strictly for demand for the Bitcoin. Ultimately, there will only be 21 million Bitcoins that'll be created. Now, we'll talk a little bit later about price, but right now the targets are all over the place. Some say Bitcoin's going to zero, and you'll see in a little bit why that's unlikely. Others will tell you it's going to go to 1 million or more per Bitcoin. Again, maybe, but that's going to take quite some time. Still, it has a very high return potential. That's what attracts people to Bitcoin, is the opportunity to take a little bit of money and make a whole lot. And in fact, Bitcoin has made people into millionaires. So it's one of those kind of investments that you put in and say, hey, I think I can grow, this will grow where I can have a substantial amount of money. Number two, Bitcoin is decentralized. And by that, it means no one company or country owns Bitcoin. That's important because there's no board of directors, there's no CEO, CFO. By the way, there are no earnings either. It is strictly a commodity out there, and so the price is determined by supply and demand. Obviously, if you've heard of that before, if you have a limited supply and high demand, you get a high price, and vice versa. By being decentralized, it means that if you were to ever lose your password in getting into your Bitcoin wallet, which we'll talk about in a little bit, you're out of luck. There's nobody really able to reset your password. In fact, one person did lose their password. They're apparently a spouse threw out a hard drive many years ago, and he's still searching for it in landfills to try to recover the amount of money that he could have from Bitcoin. But once you lose the password, you're in big trouble. Likewise, there have been stories of Bitcoin being hacked. Again, the hacking is a situation not dissimilar to what we see in the world today. People getting into accounts that they shouldn't, things like that. Number three, Bitcoin is an inflation hedge. This is certainly true because of the amazing growth rate of Bitcoin. It's going to exceed inflation by quite a bit, obviously. If you're earning 10, 20, 30 times your money, you're definitely going to beat the current amount of inflation that's out there. Also, you have institutional adoption. Now, this is very important. Right now, the U.S. holds, as a country, the most Bitcoins. That's over 200,000 Bitcoins. Second is China, and there are other countries as well. So they at least see Bitcoin as an asset of some sort and in order to hold it. But likewise, institutions now are starting to adopt it as well. There are companies out there that do nothing but just buy Bitcoin on their balance sheet. Instead of holding treasuries or cash, they buy Bitcoin. And their idea, of course, is that the Bitcoin will grow and they'll have even more and make a more valuable company out of it. So you want institutional adoption, which integrates it into the economy, and that's a good thing. Next is global liquidity. Since nobody owns Bitcoin, it can be traded around the world. You could transact business with anybody. You could take Bitcoin from your wallet and move it to someone else's wallet. Think of it like Venmo or PayPal. Now, when we talk a bit about a Bitcoin wallet, that's something that you could create by going online. A lot of the companies, and I'll use Coinbase as an example, but companies like that will help you create a wallet. You'll have a special password, and then you can put money in there and buy Bitcoin. As of this recording, Bitcoin is around $72,000 a coin. Now, you buy the coin, and you can decide then what to do. Am I going to just hold this? Am I going to buy it and then at some point sell it? And how long exactly am I going to do that? Now let's look at the cons. Number one, Bitcoin is extremely volatile, and it can be anywhere. You can see it go down 10, 15, 20% in a moment. In fact, Bitcoin was over $120,000 not more than just a few months ago, and here we are at $72,000. So you can see volatility happening with Bitcoin. And if you're one of the people who don't like volatility, this is probably not the place that you want to look, because it will move rapidly and for no necessarily good reason. You certainly want to think about that. Next, regulatory uncertainty. Well, recently, our government, the US, passed a Genius Act, which set up the framework for Bitcoin and other digital currencies like this. There is also a bill in Congress called the Clarity Act, which shortly may pass, which gives us even more detail of how Bitcoin will be regulated. Now, let's keep this in mind. If you invest in something like Bitcoin, this is not like putting money into a bank. There's no FDIC protection. If Bitcoin goes down, say, $10,000, you're out of luck. There's no regulation here for the US to come and bail you out. So it's not part of the banking system as you think of it. It is strictly an unregulated, so far, asset that you're having. There are security risks, as we talked about before. It can be hacked. You can lose your password. There are a multitude of ways that you can lose access to your account. And so you definitely would want to protect it. A lot of talk lately that you'll hear of people coming up with things that say quantum computing is going to break the code, all codes, by the way, and that anyone that holds Bitcoin, their passwords will be compromised. Likewise, not just in the case of quantum computing, but even artificial generative AI can do the same thing. At least that's the claim. And so you're going to see companies trying to do the best they can to encrypt their information so that they cannot be hacked. There's no guarantees, though. There is an environmental impact, though, to all this. So if you're very much concerned about this, and there is a lot of concern around it, in order to mine Bitcoin requires a lot of electricity, and that's a drain on the power grids, and just like AI is. A lot of discussion on AI data centers, where they need a lot of power to constantly run it 24/7. So for consumers, that may be a big negative. You don't want a high power bill to help sponsor the adoption of Bitcoin or AI data centers. Very controversial. And finally, it's speculative in nature because we don't know where the price is going. You don't know from day to day. Is it going to go up, down? By the way, this is actually tradable 24/7 around the world. So it never stops. The price will always change. And again, you have no way of knowing what that change will be. Now, obviously, and we'll talk in other podcasts about this, you could look at technical analysis and try to figure out a good entry point or exit point. Again, nobody knows the price. And I would argue with you that even when you invest in a stock, you don't know for sure if it's going up or down. No one really knows. Yes, I know there are insiders and things of that nature, but again, a lot of that is illegal. When you look at this framework, though, that we've set up here, this is a good way to look at any investment you're making, whether it be at the market or anything. When you invest in something, consider, can I make money on this investment? Will it grow long term? What's its track record been? Has it grown over the years, or has it just been flat? Is it decentralized? No, it's probably highly centralized. And so therefore you have a CEO, CFO, you have management structure. And so there is some responsibility for them to manage the company. By the way, you get to vote for those people in those positions, for the CEO and the CFO. And you can do that and also vote for board of directors. Inflation hedge. Not all investments are an inflation hedge. Now, it is true generally that stocks are considered inflation hedges. And why would that be? Well, if you've got plant and buildings and equipment, those should gain in value over time. Likewise, your product will usually go higher because, again, they're going to have to raise prices in order to beat inflation and pay their staff and things of that nature. Institutional adoption. Well, in a general sense, when you're looking at your company, you want to say, how many shares does this company issue? Now, as we said in Bitcoin's case, there's only 21 million of them. Well, in companies, there may be hundreds of thousands to millions of shares. And what that means to you is that you're just a small part of a very, very large company. So your impact is very limited. And if they have earnings, you're dividing it by many millions of shares potentially. And finally, how liquid is this company? Well, certainly in the case of most stocks, you can easily buy and sell. If you buy smaller companies, it may be harder to do so, or to get a favorable price anyway, if you do something like that. So you want to think about that when you're investing generally. Likewise, the negatives come in here with any investment you make. It may be volatile. That's something you're going to want to research ahead of time. Does this stock go up and down a lot? Should I be concerned? What happens if it goes down 5, 10%? What am I going to do? Am I going to buy more? Am I going to stay the course? Or am I just going to bail out? Regulation comes into this. Depending on your company, you could see suddenly the government get involved and regulate certain activities of the company you're invested in. Nobody likes that. It may cause them not to earn as much money or even lose money. And so you want to be aware how it all fits into the general economy. Likewise, security risks. Say you own a bank stock. Well, how susceptible are they to cyber attacks and things of that nature? Environmental impact. What kind of a company do I want? Do I want a company that is sensitive to the environment around me, such as treating the water and land well? What do you think about companies that are set up for things that you may not agree with, say smoking or gambling or any of those sort of things? Are you comfortable with that? Keeping in mind, you can still make money in those companies. Is that something, though, that you want to have happen? And finally, how much speculation is in this stock? If the stock isn't earning any money at all or projected to earn any money for quite some time, it increases the speculation market of this. In other words, people get into this knowing that it's not making money, but assuming down the road that it will. A great example of this is if you had bought Amazon stock many, many years ago. Amazon didn't make a profit for many years, yet people bought it. You can say the same thing for Tesla. And yet, when they turned the corner, the stocks then behaved very well, and of course, a lot of investors made money. But how willing are you to wait for that? This goes back to what we talked about in one of our first podcasts here. How willing are you to wait on your investment? Are you just in for the quick hit, or are you going to stay the course? A lot of this comes into psychology. Consider that analysts will write articles about Bitcoin. They'll tell you all sorts of things. Bitcoin is going high, it's going to go low, get in, get out. And this is true of stocks in general. Analysts will come out with a projection of what the next earnings report is going to look like, or why the company looks like it's heading for a downturn. Should you believe them? Is it just one analyst? Is that what you're going to base your decision on? Or are you going to ignore what that analyst says and stay the course? These are things that you have to prepare for as an investor. You can't just say, well, I put it in there and I don't know what the company does. I don't know why it's going up or down, but I'm there. It's important to know what you own. In the case of Bitcoin, Bitcoin investors, they've studied it out and said, I know exactly what this is, and I'm comfortable holding it for many years. Well, that's fine. But just realize that not every day you wake up is the value going to be higher. It can, well, as we've seen in the case of Bitcoin, it can go down 50% as well as go up 50%. Likewise, with the companies you own, you're going to have to be patient. Sure, you can get into a stock and make 10, 15%, if you time it just right, if that's what you're only after. But if you're looking for longer term gains, well, you're going to have to pull up a chair and think it through. So in our next video, when we look at this case study of Bitcoin, we're going to talk more about the historical track record of Bitcoin. We're going to talk about fundamental versus technical analysis on a company. Bitcoin is a good example of this. And we're going to talk about things that you should consider when it comes to price, how much you should pay for something, whether you should go all in at once and be done, or whether you should dollar cost average into it. There's a lot to it when you consider an investment. So I hope you will join me in my next podcast when we discuss further this case study on Bitcoin.